Hi, good morning, afternoon, or evening. Welcome to Part B of Balance Day Adjustment, the second item that we need to do on Balance Day, which is at the end of the financial year. So let's look at number B. Bad debts recover, allowance for doubtful debts, to find doubtful debts. Okay, what does bad debt means? Bad debt means when our account receivable pass away or go bankrupt, we can no longer collect anything from them. So in this case, when a transaction happens, we need to do double entry. So the right double entry would be bad debts debit because it's an expense increase, and account receivable minus on the credit because we can no longer collect anything from them. Alright? So this explains our trial balance on the first Roman here talks about trial balance at 30th June 2027. So here the bad debt of 2,000 here says that the double entry has been completed. Alright, so on the balance day we have additional information. Let's look here. On balance day, one of the account receivable was found bankrupt with an amount owing at 1,000. So what do we do when we see additional information? So always remember, students, to do double entry, especially for additional information. So we know that when bad debts happen, what we do? Bad debt increase. So we add our bad debts. Alright? So we add 1,000 here. And then what we do? We minus from our account receivable because we can no longer collect it from them. Alright? So this is what you do in the exam and also in the normal day-to-day practice. Okay, the next thing. Set allowance for doubtful debts at 5%. So what do you do here is you count. So you count your allowance for doubtful debts. I do this in short. AFDD stands for allowance for doubtful debts. So remember, when you do an adjustment, you need to make sure your allowance is times the amount that is adjusted. Alright? Sorry, there's a typo here. It's 21,500. Okay. So once we counted is 1525, what do? We put our 1525 next to our allowance for doubtful debts, if can. Alright, you put that, highlight in another color, and then the next step is what do you do? Okay, does it look confusing to you? Okay, let me be clear with you. It just looks confusing, but you can get clear. Why are we putting the calculated number next to our 1,100? Okay, remember, balance day adjustment is done at the end of each financial year. Whatever we count, when it belongs to end of each financial year, it means it's balance CD. So, how about this 1,100? What does it say? That means it's actually balance BD, the beginning of the period. So what we do here is we open the account, AFDD, and then we begin with balance BD first, and then followed by transference of our bad debts over here on the credit. How do we transfer bad debts to AFDD? Bad debts is 3,000, 2,000 plus 1,000. So we credit bad debts and we debit our AFDD. Alright. Then the next information is we record our balance CD 1525. And then what we do? We balance this particular account. Once we balance this particular account, we realize one thing. something is missing on the credit side. And this is our doubtful debts that we wanted to find so that we can put in our SOCI under other expenses. Doubtful debts is what we want to find in order to put in SOCI under other expenses. Alright, make sure the account is always CD to BD. Alright, so this is one particular example. Okay, number Roman 2 is another example. So you can have a trial balance look exactly like just now, but with lesser additional information. Okay, so this additional information only talks about set allowance for doubtful debt at 5%. So what do we do? Again, count our AFDD. Okay, alright, and then we open our AFDD. Okay, same thing. Is there balance BD for this account? No, there isn't. So there's no balance BD. So the next thing is to record our bad debts on the debit side, 2,000, and then we record our amount that we calculated. 1075 is balance CD. Why? Because it is calculated at the end of financial year. Alright, so you put it under balance CD, and what we do is we balance the account and we find out this information. Doubtful debts. Alright, let's put this another color. Doubtful debt is what we want to find. Why? Because this is the amount that we wanted to find so that we can put it under our SOCI in other expenses. Alright, continue. Let's look at the example number 3. Number 3, more things. You have bad debts, you have allowance, you have account receivable. Okay, so do the same thing. On balance day, bad debts recover is 1,000. Okay, so this is interesting. Bad debts recover 1,000. What is the double entry for bad debts recover 1,000? Okay, in order for bad debts to be recovered, it must mean bad debts has happened before or the bad debts has been written off before. Alright? So, means to say, let's say, one of your account receivable went bankrupt during the financial year and you figure out that he went bankrupt, you straight away write off the debts, debit bad debts, and credit the account receivable that is already bankrupt. So means the account receivable for that particular customer no longer exists when we have a bad debt. Alright? Because he no longer can pay you back. So we write him off. We write him off and we write off the debts. And can consider our expense. Alright? So when bad debts recover is maybe in 2 months time, 2 years time, 5 years time. After the bad debts has been written off, what happened is maybe he hit a jackpot, or maybe his business suddenly flourished, or maybe something happened, he just got a lot of money and he decided to repay you. Okay? So in this case, from your point of view as a business, it's called bad debts recover. And from your point of view, this is considered an income. Or in another words, it's other income. So what you do double entry. First of all, you record bad debts recover under credit because under income is credit. And then what happened? We add our 1,000 to our bank. Why? Suddenly we receive money. Okay. One of the most common mistakes for students is, please do not fall into it, otherwise you belong to the average, is to think that the 1,000 would minus from the bad debt. No, never do that. Alright? Remember, bad debts recover is an income. Okay? it doesn't reduce the bad debt because the bad debt could have written off long time ago. That might not belong to this financial year. Alright? And when we receive money, what happened to our bank? Bank, money increase, and our other income increase. Alright? Okay, so that is our double entry. Next one, number B. Set allowance for doubtful debt at 5%. So what do we do? Again, count. And then we do the account. Okay, so firstly, we open the account. The first thing is to record the balance BD, which is 1,005. Alright. Then we put our 1250 next to each other. Make sure it's a different color so that you know it's a balance CD. Remember, whatever we count is always at the end of the financial year, so it's balance CD. Okay, so the next item is to record the bad debts. Okay, followed by the balance CD, and we balance the account. Okay, so when we balance the account, we find this doubtful debts. Alright. And we get 1750. Okay, so this is the most basic thing you need to understand to do. Alright, the most basic. Why it's so important? Because you are required to have the skill to count AFDD. You require to have the skill to open AFDD account, to know where to put the balance BD, followed by bad debts, followed by the amount that you count as a balance CD, and to find doubtful debts as the balancing item. Alright? Okay. However, for some of you, you might want to do a shortcut. Okay? However, this shortcut is given to you because it's to enhance your understanding. Alright? Students, let me rephrase this to you. You are required to open AFDD. Probably not in this particular trial balance, but you are required to have the skill to do so. Okay? In statement of cash flow. So if you practice from now, your skill would have improved by then to help you out. Okay? However, I would love to share with you another way of looking at things to count doubtful debts. Let's look at this for this particular thing. Okay, doubtful debts equivalent to bad debt plus or minus increase or decrease in FDD. Okay, so firstly, when we look here, we know that is 2,000 plus 3,000 is our bad debts, correct? Okay, the next item is to look, is that an increase? From last year 1,001 to 1,525, is that an increase? Definitely an increase. So when there's an increase, what happened? We find the differences of the increase and plus it to our bad debts to find doubtful debts. Exactly the same amount. Alright? This is to help you when you're doing SOCI. Alright? But when you're doing when you're doing SOCF, statement of cash flow, you must have the skill to open AFDD. Alright? Students, you must have the skill. So next one, when you look at here, same thing, doubtful debts equal bad debt plus or minus decrease in AFDD. So first thing, bad debts. Okay? In this case, there's no increase or decrease because the first time you set up AFDD, so the whole amount of 1075 will get in. Followed by this particular thing, same thing. Bad debts is 2,000. In this case, there's a decrease of AFDD minus 250, and then we have 1750. That's all for now. For our part B, I look forward to see you at part C.